Welcome back to the deep dive. We're here again to really cut through the static and get you the information you need.
That's the goal.
Today, we're taking a plunge into something that, well, it might look like just another IRS form on the surface, Form 8821.
Yes, 8821.
But believe me, underneath that standard government look, there's actually a surprising amount of power. And getting a handle on its, let's say, quirks is actually a key shortcut for navigating some really vital parts of your financial world.
Absolutely. It's often these administrative forms, the ones people kind of glance over, that hold the hidden traps, or conversely, the useful tools.
Right.
And overlooking them. That can lead to real headaches, or you might miss out on making things easier for yourself. So today, our focus is squarely on Form 8821, the Tax Information Authorization.
The tax information authorization.
It's a really fundamental tool for controlling who gets to see your sensitive tax data.
Okay, so our mission for this deep dive, we're going to completely unpack Form 8821. We want to demystify its specific job, which really at its heart is about letting certain people or companies like, say, your tax preparer, maybe a financial advisor, letting them inspect and receive your confidential tax info.
Inspect and receive. Keywords there.
And we'll draw some really clear lines between this form and others from the IRS that might, seem similar but do fundamentally different things.
That distinction is crucial. Very crucial.
Then, we're diving deep, line by line, getting into the instructions, figuring out the nuances for filling it out right and getting it submitted correctly.
Because the details matter immensely here.
Exactly. Ultimately, we want you, the listener, to walk away with the practical knowledge, the implications of all this, giving you a clear roadmap for managing your own tax data effectively. Okay, let's unpack this then. Form 8821, Tax Information Authorization. So beyond the official title, what exactly is this thing? And maybe more to the point, why would you, the average taxpayer, ever need to bother with it? It sounds like something maybe only a tax pro would touch, but I get the feeling it's more relevant than most people might think.
You're absolutely spot on. Yeah. While tax pros use it constantly, it's actually incredibly useful for a lot of regular taxpayers too.
Okay.
Form 8821's core purpose, it's pretty straightforward, but really important. It's how you grant specific, explicit permissions.
Permission for what exactly?
Permission for a person you designate, or it could be a corporation, a firm, an organization, even a partnership, to inspect and or receive your confidential tax information.
Inspect and receive, okay?
Think of it like giving someone a very specific, very limited key to your personal tax vault.
A limited key, I like that.
And this access, it could be as simple as letting them talk verbally with the IRS about a tax issue you specified, or maybe getting written copies of official IRS notices sent to them.
So if I authorize someone using this form, does that mean they suddenly have, total freedom to just rifle through everything about my taxes, from day one until forever? That feels, it feels a bit wide open for something this sensitive.
That's a fantastic question. And it really gets to one of the most critical aspects of Form 8821. It's strict limitations.
Okay, good. Limitations are good here.
Definitely. The authorization you grant is not a free-for-all. It's not a blanket permission slip. You must explicitly define the type of tax, like income tax or maybe payroll tax, and the exact years or periods you want to authorize access for.
Super specific.
Extremely specific. For instance, if you want your financial advisor to see your 2023 income tax return info, income, then Form 1040 and 2023.
Right.
If you try to just scribble all years or all taxes on there, the IRS will just reject it, send it right back.
Okay.
The key takeaway here is precision. Form 8821 demands almost surgical precision. It's about targeted access, definitely not swinging the vault door wide open.
That level of specificity is, it's definitely reassuring. It gives taxpayers a clear boundary for their privacy. And speaking of control, I noticed something else in the materials. You can also use it to revoke previous authorizations.
Yes.
That seems like a really vital control feature.
It absolutely is. That's its important secondary function, really. It acts as a crucial control mechanism for you.
How so?
Well, say you previously authorized someone, maybe an old accountant, to access your info, but that relationship ends, or maybe you just change your mind.
Right.
Form 8821 gives you a clear way to delete or revoke those prior authorizations.
Okay.
This ensures your confidential info stays secure, accessible only by those you currently trust. It gives you that ongoing power over your own data.
Okay, now here's where, for me, it gets really interesting. Because sometimes knowing what something isn't is just as vital as knowing what it is.
Couldn't agree more.
Form 8821 sounds like it's giving someone pretty significant power, but it actually seems to have some really strict fences around that power. Can you elaborate on those crucial distinctions?
Precisely. And this is, I'd say, probably the most common area where taxpayers get confused.
I can see why.
Form 8821 does not authorize the person you designate, your designee, to act on your behalf in any kind of representative capacity.
Representative capacity. What does that mean in practice?
Think of it like this. Someone with 8821 authorization can look at information, they can get copies of notices, they can discuss the specific tax matters you've listed,
Okay, look, get, discuss.
but they cannot do things for you in a legal or binding way with the IRS. For instance, your designee cannot advocate your position regarding federal tax laws.
So they can't argue for me.
Nope, they can't walk into an audit and argue your case or tell the IRS, hey, this is what we think should happen. That's not their role under 8821.
So let's say my designee, who's maybe brilliant with numbers, spots a mistake, sees something that could save me thousands. They can see it.
They can see it, yes.
But they can't actually pick up the phone and, I don't know, negotiate with the IRS for me or sign off on some kind of settlement agreement.
That's the critical limit right there. They cannot execute waivers, consents, or closing agreements.
Okay.
Those are legal documents that bind you to specific tax outcomes. So while they might spot issues or opportunities, they can't legally act on them for you.
Wow.
A designee also can't formally represent you before the IRS. That means they can't show up on your behalf at an audit hearing or a collection meeting as your legal representative.
Right.
And crucially, a designee cannot substitute someone else. They can't just say, hey, my colleague needs access too.
Ah, okay.
If you want someone else to have access, you, the taxpayer, have to file a whole new Form 8821 for that new person. They can't just pass the key along.
What about something really practical, like getting my tax refund? Can I have it sent to my designee? Can they sign the check for me?
Absolutely not. And this is a huge point, really worth repeating. A designee under Form 8821 is never, ever allowed to endorse or negotiate your refund check.
Never.
Never. Or receive a refund via direct deposit into their account. That money is strictly yours. The IRS makes sure it goes directly to you, the taxpayer.
Okay.
It's a vital safeguard against potential fraud or, misuse of funds. It's a really bright line the IRS just won't cross.
So if I do need someone to go beyond just looking at info, if I need them to actually represent me, maybe negotiate, argue my position, sign documents for me.
Yeah.
What form am I supposed to use then?
That's exactly where Form 2848 comes in.
Form 2848. Okay.
Power of attorney and declaration of representative. That form is specifically designed to grant someone the authority to represent you before the IRS.
Ah, okay. Power of attorney. That sounds more like it for representation.
Exactly. That includes the power to advocate your position, execute those waivers we talked about, engage in formal discussions, negotiations on your behalf.
So the difference is huge then.
It's night and day, really. Form 8821 is about information access, the ability to look and receive. Form 2848 is about representation and action, the ability to speak and act for you.
Look versus act. Got it.
It's the difference between being, say, an informed observer and being your legal agent in front of the IRS.
And then there's another form I saw mentioned, Form 56. How does that fit into this whole picture of IRS authorizations? It sounds like it's maybe in a different category altogether.
It is, yeah. Form of 56, the notice concerning fiduciary relationship, is even more distinct.
Fiduciary relationship. Okay.
You use this form when someone legally stands in the position of the taxpayer because of a fiduciary relationship.
Stands in the position like an executor.
Exactly. Like a trustee for a trust, an executor for an estate, an administrator, maybe a receiver or a guardian. In these cases, the fiduciary isn't just representing the taxpayer, they're acting as the taxpayer.
Wow. Okay.
They step into the taxpayer's shoes, take on their legal responsibilities, and they would be the ones signing a Form 8821 or 2848 if they wanted to authorize someone else to access info or represent the entity they're managing.
So it's a much deeper level of authority.
Much deeper, more fundamental responsibility than what 8821 or even 2848 grants.
It sounds like the IRS is, really trying to push more towards digital solutions these days, which is, frankly, a welcome change for a lot of us.
Definitely a move in the right direction.
I've heard about something called a Tax Pro account. How does that connect with Form 8821? Is there a benefit to using it?
You're spot on. The IRS is making some pretty significant strides in modernizing. And the Tax Pro account, you can find it at irs.gov. Tax Pro account is a prime example.
Okay.
It's an all-digital platform built specifically for tax professionals and other authorized designees to manage certain authorizations. including Form 8821.
And the benefit. Is it faster?
Much faster, generally. A huge advantage is that most requests submitted through this tax pro account get recorded immediately onto the centralized authorization file, or CFF.
CFF, that's the IRS system for tracking these.
Exactly. It's their main database for who's authorized for what.
Yeah.
So immediate recording means your designee could potentially gain access to the needed information much, much faster than if you sent the form by mail or fax.
Wow.
It really streamlines the whole process. A big leap forward for efficiency.
That immediate recording, especially through the Tax Pro account, sounds incredibly useful. A real time saver. But, in a world where tax laws seem to change practically every other week,
Tell me about it.
does this digital progress mean we can finally expect some stability in the forms themselves, or are we still kind of at the mercy of Congress and legislative updates?
Oh, I wish I could say tax forms were set in stone. But the reality is tax regulations are incredibly dynamic. They shift. It's absolutely crucial for anyone dealing with these forms, taxpayers, professionals, everyone, to understand that things can change. And they often do, sometimes even mid-year.
So always check the source.
Always. The best advice is consistently check irs.gov Form 8821 for the absolute latest information. Look for future developments, legislative changes mentioned there. What's accurate today might be slightly different tomorrow. Staying informed is really your best defense against making errors or facing delays. It's just a continuous learning curve in the tax world.
I also saw something really interesting in our source material about Section 6103C and the penalties for misusing tax information. This seems like a really important layer of protection for taxpayers, even after you've authorized someone.
It truly is. And it's a critical legal foundation for this whole system. Section 6103C of the Internal Revenue Code. That's basically the bedrock of taxpayer privacy.
Oh.
It's not just, a nice guideline. It legally limits how your return information can be disclosed and then used by your designee.
So it puts rules on the designee, too.
Big time. What it clarifies is that the recipient, meaning your designee, is subject to significant penalties if they engage in any unauthorized access, use, or, importantly, redisclosure of your tax info without your explicit permission or specific legal request.
And these penalties, are they serious?
They can be. This isn't just an internal IRS slap on the wrist. Section 6103C includes a private right of action.
Meaning
You, the taxpayer, could potentially sue someone who misuses your data after you authorize them to access it under 8821.
Wow, okay, so there are teeth behind it.
Definitely. It's a powerful legal shield built right into the tax code, designed specifically to protect your confidential information even after you've granted initial access. It puts a very heavy responsibility on the designee to be incredibly careful and strictly comply with the limits of the authorization they've been given.
So, keeping all those crucial distinctions and protections in mind, let's get practical. When would you, the average taxpayer listening right now, actually need to use this Form 8821? It sounds like there are specific scenarios and maybe even some timing things to watch out for.
Yes, there are basically two main situations where Form 8821 typically comes into play. And it's really vital to know the difference because it directly impacts a critical filing deadline.
Okay, two main scenarios. What's the first one?
The first, and probably the most common, is when you need someone like your accountant, maybe a trusted financial advisor, to help you address or resolve an active tax matter directly with the IRS.
Like if I get a notice I don't understand.
Exactly. Maybe you get an IRS notice you can't make heads or tails of, or you're trying to clear up some kind of discrepancy on your account. And you want your tax pro to be able to look at that notice, inspect your account info related to it, and maybe talk to the IRS on your behalf about that specific issue.
Okay, so for active tax problem solving.
Right. And for this primary purpose, dealing directly with the IRS on a tax matter, there's no specific 120-day submission deadline you need to worry about. The form just needs to be filed and processed by the IRS.
Okay, that's straightforward enough for tax issues. What's the second scenario? And why is this 120-day rule suddenly so important there?
The second scenario covers what are often called other purposes, or sometimes third-party disclosures or specific uses. This is typically when you need to authorize the IRS to disclose your tax information to someone other than for resolving a tax issue.
Like who?
Common examples are income verification needed by a lender for a mortgage application, or maybe for student loan validation.
Ah, okay, getting a loan.
Right. Imagine Sarah's trying to close on her first house. The mortgage lender needs income verification directly from the IRS. Sarah fills out Form 8821, signs it, but maybe sits on it for a few weeks before sending it in.
Yeah.
In these other purpose cases, the IRS must receive the Form 8821 within 120 days of the date the taxpayer signed it.
Within 120 days of the signature date, not the postmark date.
Receive date. If Sarah's form arrives at the IRS on day 121 after she signed it,
It gets rejected.
rejected. She'll have to start over, get a new signature, resubmit it, and potentially delay her mortgage closing. It happens.
Wow, that's a huge potential pitfall.
It is. This strict timing ensures the information being provided to that third party, like the lender, is relatively current and reliable.
That's a really critical distinction then. Knowing that a 120-day rule for those specific uses, like loans, could honestly save someone from a major headache, maybe even losing a house deal.
Absolutely. I can just picture the panic being so close to closing day, only to find out your 8821 was rejected because it arrived a day late. Talk about a heart-stopping moment.
No kidding. It really drives home why understanding these seemingly small bureaucratic details is so incredibly important. A tiny oversight can have massive real-world consequences.
Exactly. There's often those silent killers in financial transactions, hidden deadlines, overlooked requirements.
Okay, so we know when to file it. Now, how do you actually get Form 8821 to the IRS today? You mentioned things are going digital, so are the old paper and pen days totally over? Or are there still different ways?
You're right. The IRS has definitely embraced digital, which is great. But the traditional methods are still around, though, with some important catches we need to discuss.
Okay, what's the preferred way now, online?
The first, and increasingly the go-to option, is online submission. You do that via irs.gov submit 8821.
irs.gov submit 8821.
Okay, this is where that all-digital processing really shines, especially if the designee is using that Tax Pro account we talked about earlier.
Right, for faster processing.
Exactly. Now, to use this online submission portal, you, the taxpayer, or the person submitting it, will generally need a secure access account.
Secure access.
Yeah.
Is that easy to set up?
It's the IRS's identity verification system. It's a multi-step process designed to be robust because, well, it's guarding access to your most sensitive financial data. You usually have to verify your identity through things like credit history questions or financial account numbers, and then often get a verification code sent to your phone. It takes a few minutes, but it's a necessary security layer. You can find info at irs.gov secure access.
Okay, so secure access is the key to online submission. What about the old school routes, fax and mail? Still an option?
Still an option, yes. But with specific things to keep in mind, you can still fax or mail your completed Form 8821.
Where do you send it?
The specific fax numbers and mailing addresses depend on where you live, your geographic location. You'll find a table, usually called the Where to File chart, right in the official instructions for Form 8821 on the IRS website.
And I should double check those.
Absolutely critical. Remember what we said about things changing. Those numbers and addresses can and sometimes do change. Always, always check irs.gov Form 8821 for the most current chart before you fax or mail anything.
Right. Sending it to the wrong place means.
Big delays.
Yeah.
Or it might just disappear into a black hole and never get processed at all. Definitely worth the extra minute to verify the address or fax number.
Now, this is where I think technology meets bureaucracy, and it doesn't always seem straightforward. Signatures. Specifically, electronic signatures on Form 8821. What actually counts as an electronic signature here? And are there special rules? Because I know this can be a real minefield.
You've nailed a major point of confusion and, yeah, a common source of errors that get forms rejected. The IRS does accept electronic signatures for Form 8821, which is progress.
But there's a catch, right?
There's a huge catch, a very crucial rule. Forms 8821 that have an electronic signature, meaning an image or a digitized image of a handwritten signature, those can only be submitted online via that irs.gov submit 8821 portal.
Only online for electronic signatures.
Okay, it's a hard and fast line. If you are mailing the form or you're faxing it. A traditional handwritten signature, what people often call a wet ink signature, is an absolute must. Digital signatures, electronic signatures, even just typing your name in a fancy font in the signature block. None of that is valid for mail or fax submissions.
Wow, okay. Handwritten only for mail fax. That's super important.
Critical. It's about ensuring the authenticity and security of those non-online submissions.
So what are these acceptable electronic signature methods you mentioned, the ones okay for online submission? It sounds like it's more than just typing your name.
Right. The IRS actually allows a range of methods here. It can be your typed name, as long as it's typed directly into the signature block of the digital form itself.
Okay.
It could also be a scanned or digitized image of your actual handwritten signature, which is then embedded or attached to the electronic record.
Like a picture of my signature.
Essentially, yeah.
Yeah.
Another way is using an electronic signature pad to capture your handwritten signature, kind of like you see at a store checkout sometimes.
Mm.
Or, similarly, using a stylus on a display screen like an iPad to write your signature or make your mark.
Right?
And finally, they also accept signatures created using third-party electronic signature software like DocuSign or Adobe Sign.
Okay, so several options for online.
Several options, yeah. But the key thing, always, is that whichever electronic method you choose, that form must go through the IRS's secure online submission portal. No emailing it, no printing and mailing the electronically signed form, online only.
That still sounds pretty advanced, especially allowing third-party software. But what about remote situations? Let's say I'm signing this form electronically, but my tax preparer isn't physically sitting there with me. How does the IRS know it's really me signing? It seems like a potential security issue.
This is a newer area, definitely more technical, but incredibly relevant now with remote work and everything being digital. When a taxpayer signs Form 8821 electronically in what's called a remote transaction, meaning the third party who's submitting the form isn't physically present with the taxpayer, that third party must attest, basically swear, that they have authenticated the taxpayer's identity.
Authenticated the identity, like a digital handshake.
Kind of, yeah. Think of it as the substitute for them watching you sign in person. The key insight here is that the IRS demands this multi-layered verification process precisely because they're trying to safeguard against common identity theft methods. It's a robust system designed to protect you when you're not physically there.
Okay, so how does that authentication actually work? If I'm an individual taxpayer signing remotely, what specific steps does my tax pro or whoever have to take to satisfy the IRS?
For an individual, it's a three-step process the third party has to follow and document.
Step 1.
First, they have to inspect a valid government-issued photo ID. This could be your driver's license, a passport, maybe a state ID card, military ID, something official with your picture. And crucially, they must compare the photo on that ID to you, the taxpayer. How?
Wow.
Either through a self-taken picture you provide them, or ideally, through live video conferencing. They need to visually match the ID photo to the actual person.
So confirm the face matches the ID? Got it. Step 2.
Second, they need to record specific information directly from you, your full legal name, your SSN or ITIN, your current street address, and your date of birth.
Okay, basic identity details.
Right. This creates a clear record linking the identity verification to your key taxpayer data.
Makes sense. So they've seen my face matches my ID, they've recorded my core info. What's the final layer? Step 3.
The third step is where they really lock it down.
Yeah.
They have to verify your name, address, and SSN or ITN using secondary documentation.
Secondary documentation, like what?
This means cross-referencing the info they just got from you with another reliable independent source document. Examples the IRS gives include things like a previous federal or state tax return, an official IRS notice or letter sent to you, your Social Security card, maybe a credit card statement, or even a recent utility bill.
Ah, okay. So they check it against something else official.
Exactly. For instance, maybe your address just changed. They might use your prior year's tax return to verify your name and TIN, but then use a recent utility bill to confirm your new address. It's about building that chain of trust through multiple independent data points. Makes it much harder for someone to fake it.
That definitely sounds thorough for individuals. Very reassuring, actually. What about if the taxpayer signing is a business entity, like a corporation or a partnership? Does the remote authentication process work differently for them?
It's similar in principle, but has a few extra really crucial layers for businesses.
Okay, like what?
First, and this is absolutely fundamental, the third party submitting the form must confirm through documentation that the individual who is signing actually has the authority to sign on behalf of that business entity.
Ah, proof of signing authority.
Yes, they need to see something like corporate resolutions, maybe partnership agreements, bylaws, other legal documents that prove this person can legally bind the company. Without that proof, the signature is meaningless.
Right. So assuming they have proof the person can sign, then what?
Then second, just like with individuals, they must inspect a valid government-issued photo ID of that authorized individual. That could be the corporate officer, the partner, the executor, whoever has the authority. And again, they compare that photo ID to the actual person via a self-taken picture, or preferably video conferencing. Verify the person matches the ID.
Okay, ID check for the authorized signer. What's next for the business?
Third, they record the specific business information. the legal name of the business entity, its employer identification number, EIN, and its official business address. This ensures they've got the correct business identified and are linking the authorization request to the right entity's tax records.
Makes sense. And is there a fourth step, like the secondary verification for individuals?
Yes, the fourth step is the secondary verification for the business itself. They need to verify the business name and address using secondary documentation.
Like what kind of documents for a business?
This could be things like a tax information reporting form issued by or to the business, like a W-2 or a 1099, or an official IRS notice or letter sent directly to the business address, or even a recent utility statement in the business's name for that address. Again, it's about cross-referencing against independent sources to confirm the business details are accurate.
Wow, that's quite a process both for individuals and businesses. It seems vital for security, though. Are there any situations where this whole remote authentication song and dance isn't required?
Yes, there is one specific exemption the IRS allows, and it basically recognizes existing relationships built on trust.
Okay.
Authentication isn't needed if the third party submitting the form already has established personal knowledge of the taxpayer's identity.
Personal knowledge, how do they define that?
It can be established through things like a documented previous business relationship, maybe a personal relationship, like being immediate family, or a similar type of ongoing relationship, maybe like between an employer and an employee. It basically acknowledges situations where identity has already been reliably established through prior direct interactions, so you don't need to jump through the hoops again for that specific transaction.
Okay, now let's really get into the weeds. The nitty-gritty of filling this form out correctly, line by line. Because as we've established, precision here isn't just, nice to have. It's absolutely critical to avoid delays and make sure your intentions are crystal clear to the IRS. Let's start with line 1, taxpayer information. Seems simple enough, but I bet there are common ways people trip up here.
You're right to focus on precision. Line 1 is fundamental. It's where you, the taxpayer whose information is at stake, identify yourself.
Right, my info.
Exactly. For an individual, you put your full legal name, your taxpayer identification number, usually your Social Security number, SSN, or, if you have one, your ITIN and your current street address.
Okay.
Now, here's a critical warning. Do not put your designee's information here. This box is only for the taxpayer whose records are being accessed.
I could see people mixing that up.
It's a surprisingly common mistake, and yeah, it gets the form rejected right off the bat.
What if it's a joint tax return? My spouse and I filed together. Does one form 8821 cover both of us? Or do we each need to send one in?
This trips up so many people. The answer is an emphatic no. One form does not cover both.
Okay, good to know.
If you file a joint return, each spouse must submit their own separate Form 8821 to designate a designee. One form only covers the specific individual taxpayer who signs that form.
So if my spouse and I both want our CPA to be able to discuss our joint 1040,
you'll each need to complete and sign your own Form 8821, authorizing that CPA for your joint return information, like Income 1040-2023.
FU forms. Got it.
Yep. Failing to do that for both spouses is a very common oversight and can really hold things up when you need help with joint tax matters.
And what if the taxpayer isn't an individual? Maybe it's a business or a trust or an estate. How do they identify themselves on line 1?
The form gives specific instructions for different entity types. It's important to follow those closely.
Like for a corporation?
For a corporation, you enter the full corporate name, its employer identification number, EIN, and its official business address.
Okay. Employee plans.
For employee plans or exempt organizations, it's usually the name, address, and EIN or SSN of the plan sponsor or the organization itself. And if it's a plan, you often need to include the 3-digit plan number.
Trusts, estates.
Trusts require the full name, title, like trustee, and address of the trustee, plus the legal name and EIN of the trust itself. For estates, you put the name and address of the estate. If the estate doesn't have its own EIN yet, you'd use the decedent's SSN or ITAN.
Okay.
And for tax-advantaged bonds, it's the bond issuer's name and address.
Sounds like you need the right identifiers for each type.
Absolutely. And a key point, especially for trusts and estates. If you haven't already done so, you often need to file Form 56, that Notice Concerning Fiduciary Relationship first, that officially tells the IRS who the trustee or executor is and establishes their authority to act, including signing an 8821 on behalf of the trust or estate.
Okay. Form 56 might be a prerequisite sometimes. One last thing on line 1, if I've moved recently, should I put my new address here on Form 8821 to update the IRS, or is that a separate thing?
Great question and another common point of confusion. The answer is no.
No. Okay.
The address information you put on Form 8821 will not change your official last known address and the IRS's main records. This form is purely about granting authorization.
So how do I change my address with the IRS?
To officially change your home address, you need to file Form 8822, change of address. For a business address change, you use Form 8822B.
8822 and 8822B for address changes.
Got it. Okay. Keep those functions separate. 8821 is for access authorization. 8822s are for address updates.
Moving on to line 2, designee information. This is where I name the person or company I'm authorizing, right? What are the key details here?
That's exactly right. Line 2 is all about clearly identifying who you're giving permission to. You need to enter their full legal name and their complete mailing address.
Does the name have to be exact?
Yes.
Yeah.
Very important. Use the identical full name on all submissions and any related correspondence. Even slight variations, like using a middle initial sometimes but not others, can potentially cause mismatches or delays in the IRS system linking the authorization correctly. Consistency is key.
Okay, identical name. And there's a spot for a CHAF number here, too. What is that again? How does it apply to my designee?
Right, the CF number. It stands for Centralized Authorization File Number. It's a unique 9-digit ID number that the IRS assigns to representatives and designees, mainly for tracking purposes. It helps IRS personnel quickly verify that someone is authorized when they call or interact.
So does my designee need one?
If your designee already has a CF number, maybe from a previous Form 8821 you filed, or perhaps from a Form 2848 power of attorney they have for another client, you should definitely enter that number here.
And if they don't have one?
If they're new to this or don't have one, you simply enter none in the space provided. The IRS will then assign a CF number directly to your designee when they process this Form 8821.
Okay.
There are a few rare exceptions, like certain employee plan or exempt organization matters where CF numbers aren't assigned, but for most typical tax situations, it's standard practice.
What if I want to authorize more than one person or company, like maybe my CPA and my financial planner? Is there space for that?
The main form only has space for 2 designees. If you need to authorize more than 2 for the same tax matters and periods, you check the box on line 2 that indicates you have additional designees. And then you must attach a separate sheet of paper to your Form 8821. Make sure that attached list is clearly labeled, like Attachment to Form 8821 Additional Designees, and includes the full name, complete mailing address, and any existing CAF number for each additional person or firm. Make sure it's legible and complete.
Okay, attach a list for more than 2. Now, what about getting copies of IRS notices? Can I have those sent directly to my designee so they know what's going on?
Yes, this is a very useful feature, especially if you have a tax pro actively helping you manage things.
How does it work?
Underneath the designee's name and address on line 2, there's a specific checkbox. If you check that box, it authorizes the IRS to send copies of all notices and communications related to the tax matters you listed on the form directly to that designee, in addition to sending them to you.
That sounds really helpful.
It can be incredibly useful for keeping your designee in the loop automatically. However, there's a key limitation here. You cannot designate more than 2 designees on a single Form 8821 to receive copies of notices and communications for the same tax matters. So, if you list 3 designees, only the first 2 listed can potentially get copies by checking the box.
Only 2 can get copies. Good to know.
And also remember, they only get copies of correspondence and notices. They won't automatically get, say, blank tax forms, publications, or other general mailings that the IRS might send you. It's specific to notices about your account for those authorized matters.
And if I don't want them getting copies?
Simply leave the box unchecked. That's the default.
What if my designee moves? Their address changes. Do I seriously need to file a whole new Form 8821 just to update their mailing address? That seems like overkill.
Thankfully, no. That would be a pain. A new Form 8821 isn't required just for a designee's address change.
So what do they do?
Your designee can inform the IRS of their new address themselves. They should send a signed and dated written notification of their new address directly to the IRS location where the original Form 8821 was filed, using that where to file chart again. That keeps their record updated without you having to refile the whole authorization.
Much simpler. Okay, now let's tackle what feels like the absolute core of this form. Line 3. The tax information columns, A through D. This is where you tell the IRS exactly what information your designee can see, which tax forms it relates to, and for which years or periods. Get this wrong and, well, the whole thing could be useless, right? Or maybe even worse, you give access you didn't intend.
You are absolutely correct. This section, line 3, is the heart of the authorization. It demands extreme precision, and frankly, it's where a lot of errors happen that cause forms to be rejected or processed incorrectly.
Okay, so let's break it down. Columns A, B, and C, that's type of tax, tax form number, and years or periods. What's the cardinal rule here?
The absolute #1 rule, no general references. You cannot write things like all years, all periods, or all taxes.
Can't just say everything.
Nope. If you do, the IRS will return the authorization unprocessed. It has to be specific. Leave no room for interpretation.
Can you give us some solid examples of what to put there? Let's say for my regular individual income tax return for last year.
Sure. For that very common scenario, you'd put income in column A, then 1040 in column B, and finally 2023, or whatever the specific year is, in column C.
Income 1040 2023. Clear.
Right.
What about something else like payroll taxes for a business?
Okay, for quarterly payroll taxes, you might put employment or payroll in A, then maybe 941 for the quarterly return in B, and then the specific quarter and year, like second quarter 2024, or maybe just 2024 if you want to cover all quarters of that year for Form 941, or maybe excise in A 720 in B for the quarterly excise tax return, and 2023 in C. The instructions clarify that for Form 720, just listing the year covers all 4 quarters.
Okay, so be specific about the tax type, the form number, and the period. What if I need to cover, say, 3 years of income tax? Do I need 3 separate lines, or can I list a range?
You can definitely specify a range, which saves space and effort. For multiple consecutive years or a series of inclusive periods, like quarters, you can enter a range.
How would I write that?
For 3 income tax years, you could write 2021 through 2023 in column C. For a range of quarters, maybe second 2022, third 2023. If you deal with fiscal years rather than calendar years, you use the YYYMM format to show the ending year and month. For example, 2024-06 for a fiscal year ending June 30, 2024.
Okay, ranges are allowed. Can I authorize access for future tax years? Like, can I put down 2025 even though it hasn't happened yet, maybe for my ongoing CPA relationship?
Yes, you can. This is very useful for ongoing representation or assistance. You can list the current year period, any past year's periods that have already ended, and future tax years or periods.
But is there a limit to how far in the future?
There's an important administrative limit related to that CAF system we talked about. The IRS generally will not record future tax years or periods on the CAF system if they extend more than 3 years beyond December 31st of the year they receive your Form 8821.
So if I file it in 2024, they probably won't record anything beyond 2027 on the CAF system.
That's typically the case, yes. You still need to be specific on the form itself. List the tax type, form number, and the future years, or periods like 2025, 2026, etc.
Okay. And for specific things like estate tax.
For estate tax, Form 706, instead of a year, you'd enter the decedent's date of death in column C. For employee plans, you usually need to include the 3-digit plan number in column A or B, along with the form number and year.
What if the whole reason I need this is just about a penalty? Maybe interest on a penalty, not a whole tax return. How do I specify that on line 3?
Good question. If you're authorizing someone only regarding a penalty and any related interest, you would enter civil penalty in column A.
Civil penalty.
Yep.
Okay.
Then in column B, for the form number, you'd put NA for not applicable. You generally don't need to specify the exact penalty type in column D in this specific case.
What about IRA penalties? Are those different?
Slightly different handling, yes. For penalties related to an individual retirement account, IRA, you'd specifically enter IRA civil penalty in column A. And for those, you typically leave columns B and D blank. They're treated as a unique category.
That's very precise. Now, what about penalties that are related to a specific return I filed, like maybe a late filing penalty on my Form 1040 or something related to my W-2 info? If I list Form 1040 or Form W-2 in column B, does that automatically cover those associated penalties? Or do I still need to list civil penalties separately?
This is a subtle but really important point. For penalties that are directly return related, yes, listing the form generally covers them.
Okay, that simplifies things.
Think of it this way. If a penalty is directly tied to a specific tax form you filed, like a failure to pay penalty on your 1040, or maybe an accuracy penalty related to that return, then authorizing access to that form, like Income 1040 2022 generally gives your designee access to inspect or receive notices about those return-related penalties too.
So I don't need a separate line for civil penalty in that case.
Not usually for those directly return-related ones, no. Listing the specific form, like 1040 W2 941, is typically sufficient to cover information about penalties tied directly to that form filing. However, remember, they only automatically get copies of new notices if you check the box back on line 2. Otherwise, they just have the authority to request or view the information.
Okay, so return-related penalties are covered if the form itself is listed. What about penalties that aren't directly tied to a specific tax return I filed? Are those handled differently? This seems like a potential trap.
It absolutely is a potential trap and a crucial exception to understand. Any civil penalty or maybe a healthcare-related payment, that is not directly return-related.
Like what?
A prime example is the Section 4980H Employer Shared Responsibility Payment under the Affordable Care Act, ACA, for businesses, or certain annual fees, like the one for branded prescription drug sales. These aren't tied to your income tax return or payroll tax return directly.
Okay.
For these types of non-return-related penalties or payments, just listing a general tax form like 1040 or 941 is not enough. They are not automatically covered.
So what do I have to do for those?
For those, you must specifically reference civil penalties in column A, or you need to explicitly state the name of the specific penalty or payment, like Section 4980H payment in column A or maybe column D.
Wow, that's a critical distinction.
It really is. Because if you miss that, your designee won't have authorization to access information about that specific penalty, and you might be wondering why they aren't getting important notices or can't discuss it with the IRS.
Okay, that covers columns A, B, and C, tax type, form, years, periods, and the penalty nuances. Now, what about column D? It's labeled specific information, not included on CS specific information. What's its purpose? Is this where I narrow the focus even more?
Exactly. Column D is your opportunity to get even more granular, if needed. It serves two main purposes. One is to specify what particular kind of information you want the IRS to provide, essentially limiting the scope within what you listed in A, B, and C.
So I can restrict what they see even further.
Yes. For example, you might only want them to see lien information related to your 2022 income tax, or maybe just the balance due amount, or perhaps information about a specific tax schedule, like Schedule C. Or you could specifically authorize access to Section 4980H Employer Shared Responsibility Payment information here if you listed civil penalty in A. This narrows the focus, ensuring your designee only gets the precise data points they need for a specific task.
Okay, so what if I don't want to limit it? If I'm okay with them seeing everything related to the tax type and years I listed in the other columns, what do I put in column D then?
If you don't want to impose any further limits, if you want them to have authority to inspect and/or receive all confidential tax information related to what you put in columns A, B, and C, then you simply enter not applicable, or NA, in column D.
Not applicable means full access within the scope of AC.
Correct. It signals you're not limiting their access beyond the tax type, form, and period already specified. It grants the broadest possible access within that defined scope. There's also a specific instruction if this Form 8821 is being used in conjunction with Form 8802, which is for requesting U.S. residency certification for tax treaty purposes. In that case, you'd need to enter Form 8882 in column D and also check the specific use box back on line 4.
Okay, this next point seems newer, maybe more technical, but definitely relevant today. Authority to access electronic IRS records via intermediate service providers. What on earth does that mean, and why do I need to explicitly authorize it with a checkbox on line 3? Sounds like another layer of complexity.
It is a critical and, often misunderstood aspect of modern tax technology access. An intermediate service provider basically refers to a private company.
Not the IRS.
No, definitely not the IRS. These are private companies that offer software or services, often on a subscription basis. Your authorized designee can potentially use these third-party services to retrieve, store, and display your tax return data, personal or business, which the provider gets indirectly from the IRS systems.
Indirectly? How's that different from just getting it from the IRS?
It's different from your designee going directly into the IRS's own e-services transcript delivery system portal and pulling the transcript themselves. These intermediate service providers act as a go-between.
Okay, and I have to explicitly allow that.
Yes. Your designee is not authorized to use one of these intermediate service providers to access your data unless you specifically check the designated box on line 3 granting that permission.
Why the extra permission step?
It's an additional layer of third-party involvement. Because these are external, private systems, not managed or endorsed by the IRS, your specific explicit consent is required before your data can flow through them. It's fundamentally about data privacy and control when non-IRS entities are involved in handling your information.
So if I don't check that box for intermediate service providers, my designee can still get my transcripts and info.
Absolutely. They just have to get it directly from the IRS
Oh.
by using the official IRS e-services transcript delivery system, assuming they are registered users of that system. Checking the box just adds the option for them to use a third-party provider. Not checking it restricts them to direct IRS channels.
And the IRS isn't recommending these providers?
No. The IRS makes it clear these are independent companies. They're not affiliated with or endorsed by the IRS in any way. Your designee's choice to use one is purely a private business decision between them and that provider. But again, your explicit permission via that checkbox is needed for them to access your data through that indirect route. Gives you control over that data flow.
Okay, let's move down the form to line 4. Specific use not recorded on CIF. What does it mean for an authorization not to be recorded on that centralized authorization file system? And why would I ever want that? Seems like recording it would be better.
Generally, yes. Most authorizations are recorded on the CAF system. That's the main database the IRS uses internally to manage these things efficiently. It centralizes the information for IRS staff across different departments.
But sometimes you don't record it.
Right. Certain types of authorizations, usually relating to very specific, often one-off issues or matters, are designated as specific uses and are not recorded on the main CAF system. Usually because they're intended for a very narrow, time-limited purpose, or perhaps for disclosure to an external third party rather than ongoing representation before the IRS. If you are submitting Form 8821 for one of these IRS-defined specific uses, you absolutely must check the box on line 4.
Okay, check the box for specific uses. And what happens then? Where do I send it?
If you check the line 4 box, the instructions usually direct your designee to mail or fax that Form 8821 directly to the specific IRS office or department that's handling that particular matter, not necessarily the general address from the where to file chart. Or they might just need to bring a copy of the executed Form 8821 with them to any appointments they have regarding that specific issue so the IRS employee they meet with can verify the authorization on the spot.
Can you give us some examples of these specific uses that don't get recorded on CFE? What kind of requests fall into this bucket?
Sure. The IRS provides a pretty detailed list in the instructions. Common examples include requests to disclose information to loan companies or educational institutions.
Ah, like for the mortgage or student loan verification we talked about earlier.
Exactly. Those often fall under specific use. Also, requests to disclose info to federal or state agency investigators, maybe for background checks.
Okay.
And then there's a specific list of forms. If your authorization is solely related to requesting information about one of the forms on this list, it's also considered a specific use. That list includes things like Form SS4, the EIN application, various W-2 forms, W-4, W-7 ITN application, Form 843, claim for refund, and a bunch of information returns like the 1096, 1098 series, 1099 series, Form 1128, Form 35553, Form 43621, and others.
So if it's just about getting info on one of those specific forms, it's likely a line 4 situation.
Often, yes. These are typically one-off information requests, often needed by external parties, and they don't require the kind of ongoing management that the CCAF system provides for broader authorizations, like for a tax professional handling your annual returns.
And what's the really key implication of checking that line 4 box, especially regarding any other authorizations I might already have on file with the IRS? Does checking line 4 revoke my previous authorizations?
This is critical and a major difference. A specific use tax information authorization 1, where line 4 is checked, will not revoke any prior tax information authorizations you have on file that are recorded on the CAF system.
Okay, so it stands alone. Doesn't mess with my existing authorizations.
Exactly. It's designed to be a standalone, targeted, often temporary disclosure that doesn't affect your broader, ongoing authorization relationships, like the one with your main tax advisor. This is a stark contrast to what happens when line 4 is not checked, which brings us neatly to line 5.
Right, line 5, retention revocation of prior tax information authorizations. This sounds really important. What if I've already filed an 8821 before, maybe for an old accountant, and now I'm filing a new one, perhaps for my current CPA or for a different tax period? How do I manage those previous authorizations? Do I need to explicitly cancel the old one?
Line 5 is incredibly important for maintaining control, and honestly, it's a huge area for potential unintended mistakes. Here's the default rule, and it catches many people off guard.
Okay, what's the default?
If you are filing a new Form 8821 and you do not check the box on line 4, meaning it's a standard authorization that will be recorded on the CHF system,
Yep.
the IRS will automatically revoke all prior tax information authorizations that are currently on file for you on their CF system, unless you specifically tell them not to.
Wow. Automatically revokes everything else.
Everything else in the CHF for the same taxpayer ID, that's the default action. It's critical because many taxpayers just file the new form without realizing this automatic revocation happens, and they might inadvertently cut off access for a trusted advisor they still actively work with on other matters.
Yikes. Okay, so how do I prevent that automatic wipeout? Let's say I'm adding a new advisor for a specific issue, but I definitely want to keep my main CPA's authorization active for my ongoing income tax stuff. How do I stop the new form from canceling the old one?
To prevent that automatic revocation of a specific prior authorization, you have to do 2 things.
2 steps.
First, you must attach a legible copy of the prior Form 8821 authorization that you want to keep active, the one for your CPA in your example, to the new Form 8821 you are submitting.
Attach copy of the old one I want to keep. Got it. What's step 2?
Second, you must check the box on line 5 of the new Form 8821. Checking this box tells the IRS, hey, look at the attachment. I want to retain these specific prior authorizations.
So attach a copy and check the line 5 box. Both are required.
Both are absolutely required. If you forget the attachment or you forget to check the box, that prior authorization will be automatically revoked by the processing of the new one. It's a deliberate 2-step process to signal your intent to retain.
Okay, that's for retaining. What if my goal is the opposite? I want to revoke a prior authorization, maybe for someone I no longer work with, but I don't actually need to submit a new Form 8821 right now. Is there a way to just cancel an old one without filling out a whole new form?
Yes, absolutely. The IRS provides ways to do that directly, giving you clear control.
Oh.
One way, if you happen to have a copy of the original Form 8821 that you want to revoke, is to simply write revoke clearly and prominently across the top of that form copy.
Right, revoke on the old form. Then what?
Then you need to provide a current taxpayer signature and date on that copy, usually right below or near where the original signature was. This clearly signals to the IRS that you, the taxpayer, are actively rescinding that specific authorization as of the new date. You'd then send that revoked copy to the appropriate IRS address based on the where to file chart.
Okay, mark up the old form, but what if I don't have a copy of the original authorization I want to cancel? Can I still revoke it?
Yes, you can. If you don't have a copy, and assuming it wasn't one of those specific use authorizations, meaning it was recorded on the CAF system, you can revoke it by sending a formal written notification to the IRS.
Revocation letter.
Essentially, yes. You'd send this notification to the IRS address corresponding to your location from that where to file chart. In this notification, you need to include several key pieces of information.
Like what?
You must clearly state that the authority of the specific designee is revoked. You need to list the full name and address of each designee whose authority you are revoking. You should also list the specific tax matters, like income, 1040, and the tax years or periods that the revocation applies to. And finally, of course, you must sign and date the notification yourself.
What if I just want to revoke all authority for a particular designee, for everything?
In that case, instead of listing specific tax matters and periods, you can simply state something like revoke all years periods or revoke all authority for that named designee. That makes it comprehensive.
And for revoking those specific use authorizations we talked about earlier, the line 4 ones that aren't on the CX system, is that process different? Where do I send that revocation?
Yes. Since those aren't managed centrally on CAF, the process is slightly different. To revoke a specific use authorization, you would either send the original specific use form 8021 with revoke written on it and your new signature date, or you'd send a separate notification of revocation, but you send it directly to the specific IRS office or unit that is handling that particular case or matter.
Not the general address?
Correct. Send it straight to the office dealing with that specific issue, because they're the ones holding that localized authorization record.
Okay, finally we get to line 6. Signature of taxpayer. This is where, the rubber meets the road, making it official. Who actually has the authority to sign this form for different types of taxpayers, and what are the critical signature requirements we need to remember?
This is indeed the point of validation, the final step that gives the form its legal weight. And first, let me just quickly reiterate that crucial point about how you sign, because it depends entirely on how you submit the form.
Right, the online versus mail fax difference.
Exactly. You must use a traditional handwritten wet ink signature on Form 821 if you're filing by mail or by fax. Digital signatures, electronic signatures, typed fonts, none of those are valid for mail or fax.
Handwritten only for paper submissions and electronic.
If you use an acceptable electronic signature method, as we discussed earlier, type name and block, digitized image, signature pad, stylus, third-party software, you must submit the Form 88201 online through the IRS's secure portal, irs.gov submit 8821.
Got it. Signature type depends 100% on submission method. Now, who signs for whom? Let's start simple. An individual taxpayer.
For an individual, it's straightforward. You, the taxpayer, must personally sign and date the authorization.
And for a joint return.
We mentioned it before, but it bears repeating. If it's a joint return, your spouse must execute their own separate Form 8821 to designate someone. One signature only covers the taxpayer signing that specific form. It's a very common error to think one spouse's signature covers both on an 8821. It doesn't.
Okay. What about a corporation? Who has the legal juice to sign for a company?
When you get into entities, the core rule is that the person signing must have the legal authority to bind that specific entity under the relevant laws.
So for a corporation?
For a corporation, it's generally an officer of the corporation who has the authority to bind it under applicable state law. Think president, vice president, treasurer, chief accounting officer, etc. It could also be any other person specifically designated by the corporation's board of directors or other governing body through a formal resolution, but you'd likely need documentation of that designation if asked. Usually, your corporate secretary or legal counsel ensures the right person signs.
Okay. How about a partnership?
For a partnership, the rule is generally that any person who was a member of the partnership during any part of the tax period covered by the Form 88821 is allowed to sign.
Any partner from that period?
Yes. And if the form covers multiple tax years or periods, that person must have been a partner during at least part of each tax year or period listed on the form. This ensures they had a direct stake during the time frame being authorized.
What if the taxpayer listed on line 1 is something like an employee plan, a trust, or an estate? These often involve fiduciaries, right?
Exactly. For these, the signature authority usually rests with the designated fiduciary or authorized representative.
So for an employee plan...
If an employee plan is the taxpayer on line 1, a duly authorized individual who has the authority to bind the plan, like a plan administrator or trustee, must sign, and they must enter their exact title.
And a trust.
For a trust, a trustee who has the legal authority to bind the trust must sign, and they should enter trustee as their title. And remember that Form 56 point. If the trust hasn't previously filed a Form 56 to identify the current trustee to the IRS, that might be needed first to establish their signing authority.
Makes sense. Estates.
Similarly, for an estate, an executor or administrator, if appointed, who has the authority to bind the estate must sign. Again, a Form 56 should ideally be on file with the IRS identifying the executor. If there happen to be multiple co-executors, generally only one co-executor needs to sign the Form 8821, as long as they have the authority under the will or state law to act alone in this capacity.
So the IRS needs to be sure the signer has the legal right.
Absolutely. They need certainty that the person granting access to confidential tax information truly has the proper legal authority to do so for that entity or individual.
And for other, maybe less common situations, like if the taxpayer has passed away recently, or a corporation is dissolved, or someone has a guardian.
For those all other kinds of situations, like a deceased taxpayer where no executor is yet appointed, an insolvent taxpayer, a dissolved corporation, or cases where a trustee, guardian, receiver, or administrator is acting for the taxpayer, the rules generally fall under Section 6103E of the Tax Code.
And what does that mean practically?
It usually means the IRS will require documentation proving the signer's status and their authority to act in that specific situation. This might involve providing copies of death certificates, letters testamentary, court appointments, trust documents, etc. This is often where having advice from a legal professional who specializes in estate law or corporate governance can be invaluable in gathering and presenting the necessary proof of signing authority.
Okay, so we have meticulously walked through this form, line 1 to line 6. But let's step back for a second. What if I just need a copy of my own tax return information? not to authorize someone else, just for my own records or maybe for a loan application. You might think, oh, I need Form 8821, but surprisingly, for getting your own stuff, the IRS actually offers much simpler and often faster and free ways.
That's a really crucial distinction to make. Form 8821 is exclusively for authorizing another party, a designee, to inspect or receive your confidential tax information.
Right, authorizing someone else.
If you just need your own tax return data, or, more commonly, just a transcript of your tax return, you absolutely do not need Form 8821. There are much easier methods available directly from the IRS.
Like what? What's the easiest way to get my own transcript?
The quickest way is usually online. Go to irs.gov transcripts. From there, you can choose Get Transcript Online. If you have that secure access account set up, you can often view and print various types of transcripts immediately.
And if I don't have secure access or prefer paper?
Also on irs.gov transcripts, you can choose Get Transcript by Mail. They'll mail a paper copy to the address the IRS has on file for you, usually within 5 to 10 calendar days.
I've heard these transcripts are often good enough for things like mortgage applications or student loan paperwork, right? Even though it's not a full copy of the return.
Yes, absolutely. IRS transcripts are very frequently accepted and often preferred by lenders and other institutions instead of a full copy of your tax return. They're used constantly to validate income, filing status, and other key data points.
Why are they preferred sometimes?
They contain the essential data, but maybe not every single detailed schedule you attach to your return, making them more concise and standardized. They are official IRS documents. Besides ordering online or by mail, you can also request transcript information by filling out Form 4506-T, Request for Transcript of Tax Return, or the even shorter Form 4506-TEZ for individual 140 transcripts. You mail or fax those in.
Can I call to get one?
You can even call the IRS's automated transcript line at 800-908-9946 to order standard transcripts over the phone. Lots of options that don't involve Form 8821 at all.
Okay, so transcripts are usually the way to go for my own info. But what if I really need an actual photocopy of my original return? You know, the whole thing, exactly as I filed it, with all the schedules and attachments. Maybe for a complex legal reason or a detailed financial review.
If you need a literal photocopy of an original tax return, an exact reproduction of what you sent in, then you would use Form 4506, Request for Copy of Tax Return.
Form 4506 for a copy.
Right.
Okay.
But be aware of two key things with Form 4506. First, there is a fee for each tax return copy ordered, and you generally have to pay that fee with your request.
Copies cost money. Transcripts are usually free.
Correct. That's a big reason why transcripts, using 4506-T or online, are preferred if they meet your needs. Second, getting a copy via Form 4506 can take time. The IRS estimates processing can take up to 75 calendar days.
75 days. Wow.
Yeah, so definitely plan well ahead if you absolutely need that full photocopy. Don't wait until the last minute.
We mentioned earlier that designees, once authorized via Form 8821, can get online tax information through IRS e-services. Just to be perfectly clear, does a properly filed and processed Form 8821 actually enable that direct online access for them?
Yes, it absolutely does. Assuming the designee is properly registered for IRS e-services themselves, a valid Form 8821 recorded on the CAF system grants them the authority to access your online tax account information through the e-services portal, specifically using tools like the transcript delivery system.
So it really empowers them digitally, too.
It does. It's a significant advantage for your authorized representative, allowing them to retrieve necessary transcripts and account information efficiently online, often much faster than requesting it from you or waiting for mailed copies from the IRS.
Now, beyond just the rules for filling out the form boxes, there are some important principles and legal foundations behind all these IRS forms. Things like the Privacy Act and the Paperwork Reduction Act. We touched on Section 6103C for privacy earlier, but could you briefly expand on that broader legal context? Why does the IRS even mention these acts in the instructions?
Absolutely. It provides important context for taxpayers about their rights and the government's responsibilities. The IRS states they asked for the information on Form 8821 primarily to carry out the internal revenue laws of the United States.
Okay, it's legally required for them to do their job.
Right. And while using Form 8801 is voluntary for you, nobody forces you to designate someone. It becomes necessary if you want to grant that specific access to your confidential tax information under the law. The Privacy Act notice specifically highlights that this form and the disclosure process are authorized by the Internal Revenue Code, especially Section 6103C and its regulations, which, as we said, are the cornerstone of protecting taxpayer return information.
And it mentions disclosing my TIN.
Yes, under Section 6109 of the Code, you are required to disclose your taxpayer identification number, SSN or EIN, on the form for it to be valid.
What about the consequences? What happens if someone provides incomplete info or worse, false information on the form, either by accident or, intentionally?
Well, if you don't provide all the required information accurately, the most likely immediate consequence is that the IRS simply won't honor the authorization request. Your designee won't get access, and you'll have wasted your time, potentially causing delays in whatever you were trying to accomplish.
Okay, it just won't work. Any penalties?
On a more serious note, yes. The instructions warn that providing false or fraudulent information can subject you to significant penalties, potentially including criminal prosecution. It really underscores why accuracy and truthfulness are absolutely paramount when dealing with any IRS form, especially one granting access to sensitive data. It's not just about getting the form processed, it's about legal compliance.
And what about the IRS themselves? Does the Privacy Act notice say anything about how they might disclose this information, maybe even beyond what I've authorized my design to see? Can they share it with other government agencies?
Yes, the Privacy Act notice does clarify that the IRS may disclose information obtained through this process and other tax administration activities to various other entities, but only under specific, legally defined circumstances.
Like who?
Examples include the Department of Justice for civil or criminal tax litigation, state and local tax authorities under strict information exchange agreements, other countries if required by a tax treaty, federal and state agencies for enforcing federal non-tax criminal laws, and even federal law enforcement and intelligence agencies in specific situations, like combating terrorism.
So there are legal exceptions where sharing can happen.
Yes, these are specific disclosures permitted by law for broader governmental functions, entirely separate from the specific authorization you grant to your designee via Form 8821.
Lastly, there's always that mention of the Paperwork Reduction Act. What's that about, and why should a taxpayer care?
The Paperwork Reduction Act notice is basically a standard disclosure on government forms. It essentially says two things relevant to you. First, that federal agencies generally can't conduct or sponsor information collection unless the form displays a valid OMB control number, which Form 8821 does. This is meant to ensure the government isn't creating unnecessary paperwork burdens.
Okay. And the second thing?
Second, it often includes an estimate of the time burden for completing the form, which we'll get to. It also reminds taxpayers that they need to retain books or records related to a form or its instructions for as long as those contents might become material in the administration of any internal revenue law. Basically, keep your tax-related records.
Right. Now, about those time estimates, the IRS actually provides estimates for how long it takes the average person to deal with Form 8821, and the numbers can be kind of surprising. What are those estimates, and what do they really tell us?
Yes, they provide these estimates, and they're often quite illuminating about the real-world effort involved, even for seemingly simple forms. For Form 8821, the IRS estimates the average time is broken down like this.
Okay.
Record keeping just gathering the info you need. About 6 minutes.
6 minutes. Seems low, but okay.
Learning about the law or the authorization form itself, basically. Reading and understanding the instructions. About 12 minutes.
12 minutes just to understand it.
And then preparing the form, copying it, assembling it, and sending it to the IRS. About 44 minutes.
44 minutes to prepare and send. Wow. So total time.
If you add that up, it's over an hour of average time investment for just this one authorization form.
So what does this all really mean for you, our listener? It means that even a form like 8821, which might look like just a page or two with a few boxes to tick, actually requires a pretty significant amount of attention to detail. And according to the IRS's own estimates, a substantial time investment to make sure it's filled out correctly, completely, and actually achieves what you intend it to. It's definitely far from just a quick signature. It's a commitment to understanding the rules and being accurate. Hashtag outro. Well, what a journey that was, really digging deep into the mechanics and implications of IRS Form 8821.
We certainly covered a lot of ground.
We've seen how this tax information authorization is, yes, a powerful tool, but also a very specifically limited one. It's fundamentally different from a power of attorney granted via Form 2848, which gives actual representation rights.
That distinction is absolutely key. 8821 is for access, 2848 is for action.
We explored the absolute necessity of precision, getting those tax types, forms, and periods exactly right on line 3. understanding the crucial differences in signature requirements for online versus mail or fax, and navigating the complexities of remote electronic signature authentication.
And knowing those revocation rules, the automatic revocation default versus how to retain or specifically revoke prior authorizations, that's critical for managing access over time.
Absolutely. And knowing the submission methods, the deadlines, especially that 120-day rule for non-tax matter uses, being well informed about these administrative tools really is a critical part of managing your financial life with confidence and, importantly, protecting your sensitive information.
Indeed. Ultimately, understanding forms like Form 8821 really empowers you, the taxpayer. It gives you precise control over exactly who gets to access your confidential financial data,
Yeah.
under what circumstances, and for what specific purposes.
Control is key.
It is. It's all about securing your information while still being able to facilitate necessary interactions with your advisors, with lenders, maybe with government agencies for benefits verification. Knowing these rules, like that 120-day deadline or the automatic revocation feature, can prevent major headaches and ensure your instructions are correctly followed by the IRS. It's a form that lets you proactively manage your financial privacy.
And that brings me to a final, maybe provocative thought for you, our listener, to chew on. Given the ever-increasing complexity of our personal and business financial lives and this constant growing need to share information securely with so many different institutions, how might the evolution of secure digital identity verification and authorization platforms fundamentally change how we interact with government agencies like the IRS in the future?
That's a fascinating question to ponder.
Could we see a future where paper forms like 821 become, I don't know, relics, replaced entirely by maybe blockchain-backed digital identities and instantly verifiable granular authorizations managed through smart contracts? What might that look like?
It's definitely the direction things seem to be heading, albeit slowly. We're already seeing that strong push towards digital with things like the Tax Pro account and online submissions. The concept of a universally recognized, highly secure digital identity could dramatically streamline these interactions, making authorizations potentially instant, fully auditable, and much more granular.
But there are hurdles, right?
Huge hurdles. The
Yeah.
challenge is immense. Balancing that convenience and efficiency with the absolute highest levels of security, privacy, and equity, especially when you're dealing with something as incredibly sensitive and critical as personal tax information. It's a massive technological and policy journey that the IRS and, frankly, governments worldwide are really only just beginning to navigate seriously.
Indeed. Definitely something to think about until our next deep dive. Thank you so much for joining us on this exploration of the surprisingly complex world of Form 8821.
My pleasure.
And keep that curiosity fired up because, as we always say, there's always more to learn, always another layer to uncover. Until next time, take care.